Good day to the ADK Wealth Advisory Group client community, as well as the financial planning world. Dan Davis coming to you from the Franklin, Tennessee office. This is a fairly short video. The focus is just recent market activity. When I say recent market activity, I'm really talking about market peaked, call it February 19th of this year. And then it was sort of dwindling down, not in some precipitous way, but steadily through like around March 13th. And it was kind of interesting because in that particular time frame, it settled and started to go sideways but slightly up through probably about April 2nd. And then April 3rd and 4th, it was a Thursday and Friday, the market just appeared to be on the cusp of capitulation. And you can see the chart illustrated here, the kind of dates that I'm talking about, and specifically focus on the downward slide and then just the bottom falling out. In the midst of that, in real time, you don't really know, is this going to turn out to be something that takes years to recover from? Or is it going to be something that hits hard and bounces back really quick? As you know from a previous conversation, in that particular point, we took some defensive measures using technical research. It's always difficult because of what I just mentioned, is you don't know which way is it going to go. In this particular instance, you had some degree of moratoriums put on the trade tariffs, and there was a lot of misinformation that following week. And so, for example, on the Monday following that Thursday, Friday of apparent capitulation, there was at one point where news came out, market was up at the S&P, and then the Dow, you're talking like 4 or 5%. The Dow was up like about 1,000 points early morning. And then as soon as the noise settled and that news was seen to be inaccurate, the market lost all of that and then another percent, so to speak. A couple days of that, and then since then you can kind of see on the chart again this steady recovery. It's in the midst of all of that, when that starts to happen, those first couple days, that first week, we were only in that defensive position for a couple days. We went from being sort of risk on to risk off, and now we're positioned in risk neutral because we still aren't out of the woods on the tariffs. We have moratoriums that for the EU, a critical date for them is July 9th. And the critical date for China is August 12th. And it's hard to say, will something happen prior to that negotiations will look favorable and come to fruition? And if those, the market probably goes up quite a bit. Or will trade wars get reenacted and tariffs flare up? There's so much to all of that, I wouldn't even predict because it's unpredictable, which is Trump's mode of operation. He likes to create chaos. He likes to negotiate from within that chaos. And a lot of the headline news I read, but I realize it's a lot of posturing from both sides. So in the end, we really don't know how those trade negotiations are going to happen. We also don't really know how the market's going to respond before, during, and after. So we're sitting in a position of risk neutral and sort of anticipating, watching, monitoring. We'll take action either way if we think that the markets are capitulating for bad trade news, or if they're going up, we'll go from risk neutral to probably risk on. Economic news is probably a little bit more definable, even though it's still very opaque. And what do I mean by that? Is you've heard me talk about economic cycles over and over again. So every economic cycle ends in a recession, and then you have recovery. Some of the best returns happen in that recovery stage. Then you have early, mid, late, end. End is where the recession happens. We're somewhere in that latter part of mid or beginning part of late, in my view of reading the economic data. I would avoid looking at any one report and using that for information to project where we're at. It's a coalition of a bunch of data, a bunch of reports, and then the problem is they'll come out and then they'll get revised. But we're in a spot where you're going to see negative news at times and then positive news. The bottom line is economic news would cause me to say that we're in slowing growth. We're not in recession territory. We're in slowing growth. A great example of that was an article in the New York Times within the last 2 months. And the IMF had done a report, big headline. And the headline captured my attention because I was like, oh man, there's some news that I'm not aware of. Because the headline made me think a recession's more likely. The first third of the article made me believe that as well. The bottom third of the article was the telling point. And they said at the beginning of the year, the IMF, the International Monetary Fund, thought globally that we would grow at about the same rate as we did in 24. Call that a low threes, 3.3. And the article basically said we're going to lose about 0.5% from that. So now we're projecting it to be 2.8. 2.8 is such a long way from a global recession. And so what I would just basically say is we're in a lot of uncertain times. We can see from the chart that you're looking at once again, market looked like it could capitulate, started to recover. It's in recovery mode, but that recovery is very sensitive to how this trade news comes out. We'll be monitoring this for you closely. We'll have a market update at the end of June. We'll probably be doing things in the time frame of August as well relative to the China news, or if there's something that really happens along the way. So thank you again for your trust. I know that times like what we were going through a bit ago, let's call it a month, we're really trying. And I also realize that you placed a lot of trust in us. We'll continue to monitor risk and take action both defensively and aggressively based on how we see the markets playing out. This is the epitome of investing involves risk. Our outlook of what our expected return for the year has not really changed, even though it's really sensitive to what happens in these trade deals. So again, thank you very much for your trust. Signing off from Franklin, Tennessee. Have a great rest of the day.